Well, hello, traders and investors. My name is Roger Scott. I'm the head trader for Wealth Press. Today is Friday. It's finally Friday. It's August 14th. What do I always say? Let's get into it right now. Now, today is Friday, and usually Friday we have unemployment data. That's coming out in about half an hour, but I wanted you to see something really exciting. This is jobless claims, and the moving average, the 4-week moving average has been about 1.339 million, 1.338 million. And the consensus estimate was a lower initial claims. And we had the number come out at 963,000, which is 249,000 less than a week ago. And that is substantially lower. It's about 400,000 lower than the 4-week average. That is very, very positive. Now, I'm hoping today's unemployment data is going to be better than expected, or unemployment is going to be lower than expected, and that the market can work up from there. That would potentially show us that things are starting to come up, and that is the trout. I'm hoping that is the case. We will know soon. Keep your eye on the unemployment numbers. They're coming out in about half an hour. But the jobless claims so far, which is a precursor to unemployment, jobless claims, unemployment, it's looking much better than expected. I mean, overall, it's crap, but in comparison to the 4-week average and in comparison to what we've seen, the numbers are much, much better. If we can continue going down this route, it'll have an impact on the GDP because less people unemployed, more people working, more people spending money, so forth and so forth. Let's take a real quick look at global economy. Global shares were subdued, bad data coming out of China. Europe, Asia, kind of mixed, nothing really worth talking about, but this is worth talking about. China reported that its factory output rose almost 5% from a year earlier, on par with June's increase. That's good, that's positive. It's assuming they're telling us the truth, things are starting to move. Now, I collect a few things. I don't want to get into it right now, but I collect a few things, and the parts were broken in January of this piece that I collect, and I needed parts, and they make them in China, and it was sold out. And you know what? They just got their first order in. So I know for a fact that China is moving. How fast they're moving, I don't know, but parts for supplies in U.S. are starting to trickle in. That is very, very promising, and it leads me to believe that they may be telling us the truth based on what I'm seeing with my own eyes. Retail sales fell 1.1% as consumers remain cautious. I'll tell you, retail sales in America are just going through the roof, but in China's a different economy. Malaysia reported, meanwhile, that its economy contracted at a real annual rate of 16.5%, its worst downturn on record for obvious reasons. The Malaysia Central Bank forecasted the economy will return to growth next year. Trade tension between U.S. and China is heating up again, as Asia regional growth depends on exports to those giant economies. Again, I personally believe this is a terrible time for a trade war with China. We have a huge amount of vulnerability, so does China, but Trump is Trump, and Trump has his way, so I'm not going to get into that. I know that I was just looking at the news before getting into this, and I just saw a headline that Dutch economy shrinks by an unprecedented 8.5%. So that is new. That just literally came out about an hour ago. I don't think that's going to have a huge impact on the world because the Dutch economy, frankly, doesn't impact our economy that much, although you may see higher prices on Heineken beer. All right, I want to talk to you guys about something important. Today's Friday, and yesterday I had a nice talk with Adam Sarhan. I hope I'm pronouncing your name right, Sarhan. And we had a nice talk about the S&P 500, and we were talking about the strongest stocks, and I was showing him, or we were having this discussion. It was very interesting because consumer discretionary sector is now outperforming technology. And consumer discretionary has not been the leading sector in a long, long time. And what does consumer discretionary tell us? Consumers spending money, moolah. And notice, if you looked at this graph, this is my relative strength CSI scan for the top 500 stocks, it was loaded with biotech and tech. Well, over the last few weeks, we started seeing freight shippers in there. We started seeing basic materials, United Rental, home sales. We started seeing Whirlpool. But here's what's interesting. We started seeing L brands. Where's Gap? Gap was here. Gap. We started seeing Fortune brands. We started seeing Hanes brands. Those are retailers, folks. Gap. It looks to me like people have had it. And they're not going to the malls, but they're starting to do their shopping online at an increased rate, which is why you're seeing PayPal up here, which is why you're seeing FedEx and UPS. People are relying on freight shippers to getting their goodies. People are like, I need stuff. I need clothes. Folks, even I started buying clothes online. I've never, ever bought clothes online. I'm one of those guys. I'll go to the mall twice a year. I'll buy like a million things, and that'll be it. And then my wife buys me stuff, but she's not going anywhere. So I have resorted to buying shirts and whatnot online. I've never done that before. I'm not the only one, and I'm going to be 50 years old in October. So I'm sure a lot of younger people are doing it, more fashion conscious people, as you could see by my clothing. I'm not, I'm no fashion model. So the point of the matter is, the broader market is starting to make a headway. And that's really interesting because we're starting to see growth from transports. We're starting to see growth from consumer staples. I talked yesterday about two stocks that are really, really moving up, consumer staple stocks. So again, the two stocks that I talked about were Kroger Supermarkets, KR, and Kraft Heinz. Very good consumer staple defensive stocks that are on the up and up. But now I want to talk about stocks that are doing terribly, stocks that are on the chopping block. So I'm thinking to myself, if the rally, think about my logic here. This is important because I'm giving you a chance to get inside my head, which is really more important than me giving you tickers, because you can learn from this. You can extrapolate this and use this in your own analysis. So here's what I'm thinking. Momentum levels on tech stocks on the NASDAQ 100 are through the roof. The fact that we're seeing a broader exposure in the S&P 500 versus just tech or biotech, which is the NASDAQ 100, is telling me that the NASDAQ 100 is going to cool off, and it should cool off. It's been leading them. It's been outperforming every index thus far. It's been like a defensive sector. It's been like the utilities would be in the defensive sector. It's been tech, biotech. So I'm thinking we're going to see a cool off on the concentrated biotech and tech sector, and we're going to see a broader the S&P come up higher. Now, the S&P is lagging behind the NASDAQ 100. So if this happens, either one of two things will happen. The NASDAQ will cool off while the S&P stays firm, or the NASDAQ will cool off, go down, while the NASDAQ will just stay where it is, and the S&P will come up. Regardless of those two scenarios, regardless of the scenarios we're going to have, the NASDAQ is going to cool off, or the S&P is going to start outperforming it, which means the stocks in the NASDAQ, the weak stocks in the NASDAQ, are going to get even weaker. Because look, if the strong stocks in the NASDAQ are going to get weaker, the weak stocks in the NASDAQ are going to get weaker. So what did I do? I went the opposite direction, and I looked at the weakest stocks in the S&P, and I wanted to now I could have just looked at the NASDAQ 100, but I could assure you, I know the stocks that are in the NASDAQ 100, so I don't have to do this. But yeah, I could do the same thing on the NASDAQ 100. And as a matter of fact, I will before we depart. But I wanted to show you the stocks that I'm bearish on right now in the NASDAQ 100 and in the S&P 500. And remember, most stocks in the NASDAQ 100 are also in the S&P 500, because the S&P 500 is 500 stocks, broad stocks. NASDAQ 100 is 100 tech and biotech stocks. So again, and you may want to rewatch this video because I've got some goodies for you today that you need to pay attention to. So there's a lot of things that I'm talking about, so you may want to rewatch this video. So again, I just go down the list. This is from weakness to strongest. Western Digital, absolutely. Everybody's moving to the cloud. People are not buying hard drives for their computers anymore. Cloud storage is the key, and Western Digital isn't moving fast enough on that. So I'm not a big fan of Western Digital. And you could see here, it bounced, and now it's almost at the lows. Not a really strong stock. Then we have Intel. Now, you're probably thinking, Roger, Intel's like the strongest stock. Not anymore, and I've been telling you that for a while now. Now, you got to be careful with Intel because it still has a lot of market cap, but look at this thing. It's almost near the low. They moved into a different direction. They didn't move into cloud fast enough. NVIDIA actually did. But remember, folks, people are now relying more on the cloud than their personal computer. The future is the cloud. So Intel did not move in the right direction. They didn't have a good forward-looking statement, and they need to do a lot of catch-up. AMD is now outperforming, and Taiwan Semiconductor has the process. So we go further, and look what we have here, Seagate. And if you notice here, negative, negative, negative. Negative, negative, negative. Intel. I can't believe I'm talking about Intel, my dad's favorite stock. Negative, negative, negative. Not well. But let's take a look just so that, you know, we could be cautious. Let's take a look at the Nasdaq and see how it fares in comparison. Oh, look at that. I did not do this before coming here. Look at the two weakest stocks, Western Digital and Intel. What a coincidence. You can't fake me on this. Micron. Wow, Micron is here too. Let's see here. What about Seagate? Where is Seagate? Is Seagate on here? I don't see Seagate. Huh, look at that. I don't see Seagate. Well, 2 out of 3. 2 out of 3. Let me see. Is Seagate in the Nasdaq 100? No, it's in the index. It's in the Nasdaq Composite. It's not in the Nasdaq 100, which is why you're not seeing it. That makes more sense. So again, 3 stocks on my chopping block: Intel, Seagate. Let me show you the chart. It looks terrible. I mean, look at this thing. And Western Digital, and none of them are bouncing. Now, folks, I got something really important to tell you, and it's Friday. Pay attention. This is going to be very, very material to what's going on this week, next week in the markets. This is really big. Pay attention. The little guy, they're leading a charge against Wall Street. I'm not kidding this. And this could open up opportunities to strike it rich, even if you aren't a trading expert. You don't have to be an expert to know this stuff. For the first time in trading history, and I mean that for the first time ever, the balance power has swung in a totally different direction. Retail investors could have just as much potential to move the markets as Wall Street. I'm going to repeat that again. For the first time in history, retail investors have the power to move the markets just like Wall Street. Retail investors, institutional investors, that line is becoming very, very murky. The Robinhood effect, that's right, the Robinhood effect could forge a new path for the everyday trader, giving them the potential to see gains upwards of 339% every single week. Can you imagine making 339% every single week? I want you to get a slice of it too. In just a few minutes, I'll reveal exactly how you can make the most of this opportunity and more. Don't let today's opportunity pass you by. Click on the link below to potentially triple your earnings in less than a week. Folks, again, this Robinhood effect, it's taking over Wall Street. For the first time ever, Wall Street and Main Street, smart money, dumb money, it just doesn't matter anymore. It doesn't matter. It's all murked. All we care about now is big money. Not smart money, not dumb money, big money. If you want to learn how to potentially get 339% return in less than a week, follow the link below. Check out the Robinhood effect. It's the biggest thing ever. And most importantly, have a great weekend. Bye.